Welcome. This is question 5, May 2021 ATD paper, and it's a theoretical question, so we'll go through it very fast. The objective of financial statement is to provide information about the changes in financial performance and financial position of an entity that is useful to a wide range of users in making of economic decisions. So the question is required, list 5 users of financial information, explaining their information needs. Now, this question we have answered so many times, and it's quite a straightforward question, so I'm not going to spend a lot of time on it. Instead, I'll choose to be very fast so that we can do some other things. So I'll be very fast with this question so that we can just get rid of this. Okay, list 5 users of in financial information, clearly explaining their needs. Now, number 1, financial. I want to approach it in a different style. Financial information is used for planning purposes. Planning purposes. You know, we talk of budgets, budgeting, forecasting. Forecasting and such like group. Investment appraisal. It's also used to know the performance of the business, in terms of profit, if the business is making profits or losses. It's also used to know the financial position or standing, of the business at any given point in time. We are talking about if the business, the ratio between assets and liabilities, current assets, current liabilities, It's also used for decision making, especially on whether to invest on a certain project, business or not, on whether to invest or not. It's also used for appraising credit worthiness, the credit position. If the firm is suitable to be advanced a credit facility or not, advances of credit facilities. It's also used for references, or just to refer records, for record keeping, for references. And it can also be used for control purposes, especially where we try to get the relationship between what we had anticipated and the actual results. We have the expected versus the actual results. If there exist any deviations, we take the necessary corrective measures in time. That's also one of the purposes of accounting. Then we also talk of what else can we mention? There are so many. I think let's just work with this. But there are quite a number. Now, just from this, who are the users of this information? Of course, we have the owners. Owners will want to know the financial standing of the business. They want to know how the business is performing. They want to make decision on whether to invest in a certain venture or not based on the previous performance. They'll want to refer to their records on what they did, how they did some time back, and if they can, maybe borrow 1 or 2 things from that. So owners will make use of this information. Managers, of course. Managers to plan, to know how the business is performing, to know the financial position of the business, to make decisions on whether to continue the business or to stop a certain line of business. Bankers, financial institutions, especially in checking the credit worthiness of a business. And that also applies to suppliers. Suppliers will also want to check. Suppliers, can we supply goods to these people on credit? How is their payment, the payment ability? They'll want to check, and the books will show the payment ability of their customers. Even customers, to check on the loyalty state of their, and the going concern. Going concern, very important. That is from the performance of the business. The customers will want to see, to check if the business is going concern, so that they don't create a relationship with their business that is going to dissolve the following day. So they'll want to check if the business are going concern. How do they check? They check on the books of accounts. And this one, basically financial position and standing, very important for customers. And then you also have the potential investors. Is it worth putting their money in this business? Potential investors, they'll want to see the performance of the business. They'll want to see the asset level of the business. The government, the other purpose is for tax determination. You see, tax determination. The government will want to check the books of accounts. Why? To ascertain the taxes, if the taxes that have been declared are actually correct. So all these are users of financial information, even the employees themselves, employees of the organization, to check on the job security. And this is in line with financial position. Is the business stable enough? Is it a going concern? How do you know if a business is a going concern? Check on the final statement of financial position. You'll be able to see if the liabilities exceed the assets, that relationship. So the employees will want to check that, and that is basically the use of financial accounting information to know if there is some job security, to know if and even for motivation purposes, and this motivation will come from the performance. If they have, if the business has performed well, the books of accounts should be able to show that through the profitability. You see, and from that, the employees will be able to know that, hey, we performed well, better than last year, and so that in itself can be a motivator to them. So you can see, all these people are using this information in one way or the other, and these are 8, and these are 9 uses. So just pick any 5, and you'll be good to go. That is the answer to that question. Let's go to part B of the question. Part B, explain the following terms as used in the financial accounting. Explain the following terms as used in financial accounting. Journal proper. Journal proper, this is a general ledger. It's basically a general ledger, and is used to record all the accounting transactions that cannot be recorded, in any other journals. So they are used to record all the transactions that cannot be recorded in any other journals. What we mean by any other journals, we have the sales day book, we have the purchases day book, we have the return inwards day book, we have the return outwards day book, we have the petty cash book. Those are the other journals or day books that we have. Anything that cannot be fit in those books will be recorded in the journal proper or the general journal. That's where, so it's a book that is basically used to record all the other transactions that cannot be captured by other existing day books. And apart from just that, it's used to record, we've said all the other transactions. We are talking about like opening stocks, closing stock, purchase of non-current assets on credit, such like stuff. Those ones are will find their way in the journal proper. And even correction of errors, very important, correction of errors. And we actually did correction of errors. I think it was in question 1 of this same paper. We correct errors by use of this journal proper, the journal, general journal. So correction of errors will be done by this. Recording of all the other transactions that will not be captured by any other book will also be done by the general or the journal proper. So that is what that book is all about. It's a book of original entry in which all types of miscellaneous credit transactions which are not recorded in any other journal are recorded here. So that is the definition, and normally the way it is, we have looked at it before. You have debit and you have credit, and then of course you have the particulars, and you might have also the date here. So this is how it is. It's a general ledger that is used to record all the transactions that cannot be recorded in all the other journals or day books. Then the trial balance. Trial balance is just one of the books that is used to summarize all the transactions, all the ledger transactions in terms of debit and credit. So it's one of the books that is used to summarize all the transactions that have been captured in the ledgers, and it summarizes that information in form of debit and credit balances. The main purpose of the trial balance is to check on the accuracy in postings and accuracy in arithmetic computations. So accuracy in posting and accuracy in arithmetic computation. So it's mostly used to detect errors. During the posting of the transactions in the ledgers. If there are any errors, so that the debit side and the credit side don't balance, the trial balance will detect. Though we also have errors that the trial balance may not be able to detect, as we have discussed in one of the questions above. I think either question 1 or question 2. I think question 2. We have discussed errors that cannot be disclosed by the trial balance. So it's one of the books that is used to summarize all the ledger, all the transactions that have happened in the ledger, and normally we transfer the totals, the balances from the ledgers to the trial balance, and then from the trial balance now we can come up with the final books of accounts. So it's like a bridge between the ledger postings and the final books of accounts. Final books of accounts will be gotten from the adjusted trial balance. So trial balance basically is a tool that helps us now to move to the other side and be able to prepare the final books of accounts. A sales ledger. Sales ledger, this is a ledger that is used to record all the sales that have taken place in an organization. There's a difference between a sales ledger and a sales day book. Sales day book is used to record all the credit sales in a day. All the credit sales in a day. It's called sales day book or sales journal. Used to record all the credit sales in a day. But sales ledger is used to record all the sales, cash sale and credit sale. So long as it's a sale, sales ledger will be used to record that. A sales ledger has the debit and credit side, and it normally the sales is treated as a credit account because of the loss of the stock. We are reducing on the stocks, so we show it as a credit entry. So sales ledger, this is basically a summary of all the sales that have taken place in a month. In most cases in a month, but we talk of a given period of time. The difference between sales ledger and sales day book is only used to record the credit sales that take place in a day. So day-to-day credit sales. But sales ledger, all the sales that have taken place in a particular period of time, and in most cases we talk about a month. It's a credit entry. Then purchases ledger, same. Purchases ledger is a debit entry because we are buying goods. So goods are coming in the organization. Stocks are increasing. So it's a debit entry. Stocks are increasing. So it's a debit entry. Stock are assets. When assets increase, we debit. So it has the debit, it has the credit side. All the purchases are recorded in the purchase ledger, whether they have been done on debit or whether they have been done on credit or in cash. But we also have a purchase day book. Don't confuse the two. Purchase day book. This is a book that records all the credit purchases in a day. Now this question is asking for purchases ledger. So this is what we are talking about. A ledger must have the debit and credit side, and it's a book that basically records all the purchases that have taken place in a given period of time, mostly a month, whether cash purchases or credit purchases, and purchases are always debited in the purchases ledger account. Personal accounts. Personal accounts are accounts which have individualized names, accounts that have individualized names, and we are talking about a person's name or a business. Very common when we talk about debtors and creditors, where you need to open an account based on the name of that particular debtor. You can open a T. Omondi account if it's a debtor, and you can also open a P. Omondi account, credit, debit, credit, debit. So if T. Omondi is a debtor is an asset, so debit account. P. Omondi, if P. Omondi is a creditor is a liability, liabilities are credited. Liabilities are credit accounts, assets are debit accounts. Assets are debit accounts, so you debit. Liabilities are credit accounts, so you credit like that. Credit like that. So personal accounts are accounts or other transactions in these accounts are related to individualized names of individuals, like you've seen. You have T. Omondi or P. Omondi, or names of other businesses that have direct transactions with your business. Now, debtors make a very good example of personal accounts. Creditors make a very good example of personal accounts. So that should be able to give you, the 1 mark and the 2 marks, 2 marks, 2 marks, 3 marks. Yeah. So you can see this one for 3 marks. Make sure you define and give the purposes. Like for us, we've given the purpose of journal proper. We've said correction of errors. We've said to record opening balances, to record closing balances, to record purchase of non-current assets on credit. Once you can show that you understand even the uses, the examiner will give you all the marks. So, thank you. Let's meet in the next question.